As we can see, correction in the US stock market has increased over the past week, even despite positive economic outlook. This is quite a natural situation, especially after a continuous strong rally without pullbacks. The likelihood of a deep correction has increased. However, there might be a new round of growth which is likely to be weak and short-lived. The Dow Jones Industrial Average was the only index that managed to post gains in the previous week. At the moment, the Dow is trading at 34,100 points, but is likely to reach 34,050 in the course of a downward technical correction. Apparently, market participants tend to take profit on those shares that showed rapid growth over the past year. In the short term, there might be a slight decline in the index that may come together with strong volatility. On the S&P 500 index, the situation is a bit different. Over the week, its quotes were moving up, but then declined, without gaining anything at all. Today, the index may easily slip below the level of 4,180. In general, the quotes are likely to remain in the range of 4,100–4,200 in the course of the week, so the trading range is quite wide. Last week, the Nasdaq Composite dropped to the mark of 13,730, while in the previous week it was trading at 14,050 and above. The decline may be caused by the fact that after the lockdown restrictions have been lifted, many tech companies failed to post the expected earnings results. Despite steady growth in shares of many IT giants in April, they may enter the phase of decline in May and June. This also refers to those who started taking profit at the peak levels. As a result, Nasdaq may fall to 13,600 with a possible correction to 13,900. The outlook for separate shares does not give a whole picture of the stock market, although it was obvious that last week the companies of the tech and automobile sectors received the biggest blow. Unfortunately, Tesla shares lost almost $40 over the past week. At the moment, its stocks are trading at $675 per share. This drop happened due to a global chip shortage. Because of that, Tesla had to partially suspend the production of cars. Such IT giants as Microsoft are also experiencing some headwinds. Many market participants will probably bet on decline in Microsoft shares, in particular due to inflated expectations of profit results, the shortage of microchips, and the general overbought conditions of the stocks. Those traders who have invested in such mailing giants as FedEx and UPS were the ones to cheer last week. Thanks to partial resumption of air travel, the stocks of these companies advanced amid expectations that the volume of cargo transportation will inevitably increase. Despite a steady uptrend in the stock market, there are warning signs that some investors will sell following the news. Take Microsoft, for example, that has easily exceeded the third quarter earnings forecast. Ahead of the publication of the corporate report, its shares reached a new yearly high, but then the price pulled back to close the week lower by 3.4%. The same happened to Amazon, which also posted strong financial results for the first quarter. All this may indicate that investors will prefer to take profit and take a wait-and-see approach to determine possible scenarios. You've watched Weekly Financial Review on Insta TV with me, Anna Kasatkina. See you back soon.